Hello everyone, this is today's video analysis for March 20th, 2019. Today we're going to take a look at the GBPUSD, the Great British Pound versus the US dollar for today's trade analysis. Starting here on the daily time frame, we can see overall, we're going back to late November, early December, this currency pair has been in an uptrend. Of course, extreme volatility in the past few weeks because of news out of the UK about Brexit has caused sudden movements, rising and falling, unexpected sudden movements, often rising and falling here for the pound dollar in any pair that includes the GBP. But I think it's very interesting what we've seen over the past week or so. The market, of course, rose rapidly from, we'll just say, right around the 129.85.50 level all the way up here into the 133.20 level, the pink shaded area up here at the top of the chart. In the past 4 or 5 days, we've seen the market finding resistance there at the pink shaded area, 1.3290, 3320, and support 1.3240, 3210. So we've been rattling around, bouncing around in here as an area of indecision or ranging or congestion or consolidation, whatever you want to call it. It's been happening here between the pink and the orange zone at the very top of the chart. So the question, of course, is what's going to happen here? Will it eventually reverse and start going back down under the orange zone, under 3210, falling back to towards the blue zone, or maybe even all the way down to the red trend line again? Or will it bounce off of here once again, as it has for the past 4 days, and challenge the highs back into the pink zone, eventually breaking the pink zone and continuing the uptrend? There's a couple of forces, of course, that will potentially affect this. Of course, any more Brexit news will affect this. We also know that today FOMC, coming from the Fed from the U.S., coming out, may also have an impact on U.S. dollar strength or weakness, and that could cause directional purpose here for this currency pair as well. A good, solid, positive move for the U.S. dollar may see this continue to pressure lower, breaking through the orange zone 3210 and heading lower. If it's cautious, if it's dovish, if it's poor news for the U.S., then we look for this to turn around and potentially make a new high for the pound dollar. So, but we're in that area, and I think we're in an area that has significance here into the orange zone 3210. 40. And again, like I said, one of two things is going to happen. Either it's going to do what it's done for the past 4 days, bounce off and go back up, or it's going to break through. So what we want is lower risk and higher reward. That's always what we're looking for, low risk and high reward. Well, at least right now, your risk is fairly low and your reward or potential profit is higher for buying than it is for selling. Right now, your risk would be higher. Even if you just put it above today's high, your risk is higher and your potential profit is being capped right now at 3210. That's the way it's been for the past 4 days. So you can't have confidence yet that it's going to go down because it hasn't been able in the past 4 days to break through 3210. So we can't expect that yet. So if we're going to see it go lower, the first thing that's going to happen is we're going to have to see the market get underneath this orange shaded area. That's the first thing that has to happen, and it hasn't done that. So without that, we are looking for also the opposite of that, which would be evidence of buying pressure here from the orange shaded area and support. Again, we have FOMC today. Earlier today, 5:30 a.m. Eastern U.S. time, CPI, PPI, RPI, some news out of the UK. A little bit of a mix, some of it positive, some of it negative. The CPI, the main CPI number, did come out 0.1% better than the forecast, but that doesn't seem to have had a positive impact here on the pound dollar. Take it down to the 4-hour time frame. Again, doesn't really change it a lot. You can really see how the market has been finding support here. So one of two things. If we're going to trade this today, we need either a sudden infusion of buy orders. We need something that tells us buyers are coming back. A bullish engulfing candle, hammer candlestick, something that tells us buyers are fighting back here. Otherwise, finally, an eventual breakdown of this orange zone may lead the pound dollar lower for today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.